Hello, everyone, and welcome back to another episode with your boy Money Spence. In today's day trading episode, we're going to cover how to pick the perfect strike price for bigger profits when it comes to trading options. Picking the right strike price can make or break your options trade, but don't worry. I've got a simple, effective method that helps me choose the perfect strike price for bigger profits. Many traders usually struggle with choosing the best strike price. If you go out too far, the option barely moves. If you go too close, you overpay. Today, I'm going to show you how I use support and resistance levels to pick the ideal strike price every time. So as you all can see on our chart, we have the option chain pulled up. So if you look at the center part, that's the strike price. And these options, they expire tomorrow on March 28th. So on the left-hand side, we have call options. Whenever you purchase a call option, you're betting on the market trending towards the upside. We have put options on the right-hand side. Whenever you're buying a put option, you're betting on the market trending towards the downside. We just covered some few basics of options. Now let's take a deep dive and look at the chart, because the chart, it's going to allow us to pick the perfect strike price to secure some of these massive gains on a daily basis. We're going to use the QQQ as an illustration for today's day trading video. So in order to pick the perfect strike price, it's a few things that you must have in place before you place your trade. So I want you all to pay close attention to the red line that I have right here. That's our pre-market high. And I also want you to pay close attention to the green line that we have right here. That's our pre-market low. So before the trading day begin, you want to make sure that you have your pre-market high drawn on your chart, and you also want to make sure you have your pre-market low drawn on the chart. And if you're looking at the chart, our pre-market low, it was priced at $482.07, and our pre-market high, it was priced at $485.22. So ideally, you want to pick a strike within those price ranges based on the pre-market data. So the Qs, they opened up at $482.41. And if you're looking at the open, we broke below our pre-market low. So let's say, for example, if you wanted to trade on the open, but remember, it's extremely risky trade on the open. So please keep that in mind. It's extremely risky trade on the open. So on the open, we had our intraday resistance at $483.40. And we broke below VWAP, this yellow line. Whenever we're trading below VWAP, that's usually a bearish sentiment towards the downside. So let's say, for example, if you wanted to trade on the open, you could have purchased the $483 puts or the $482 puts. Well, Spence, why should I purchase the 483s or the 482s? The primary reason you want to focus on those two strike prices, because they are trading near the QQQ price. And you want to be instantly in the money when it comes to trading options. So let's say, for example, if you purchased right here, you purchased the $483 puts. Purchase right here once we drop below VWAP. And the ideal reason why I said purchase the 483 puts, because we had resistance at $483.40. Or if you wanted to be on the safe side and purchase an option at a lower price, you could have purchased the pre-market low strike at $482. And then you could have sold your entire position right here at the intraday support zone. So this would have been a quick play for about maybe 10 or 15 minutes max. You could have sold your entire position right here. This was actually my entry for a move towards the upside. So if you look at my chart, right, I have green and red arrows developed on my chart, and that comes from the TTM scalper alert. It helps me with identifying the perfect buy and the perfect sell. In this case, at 9:40 a.m., I identified the perfect buying opportunity. And you could have purchased the $480 calls right here. We had our TTM scalper alert, this red arrow below the green bullish candle. We bounced off of support level number one. You could have purchased either the $480 calls or the $481 calls or the $482 calls. Well, Spence, why should I focus on those strikes? You want to focus on those strikes because we were already trading close to those prices earlier when the market opened up. So I'm going to highlight the 481 zone. That's the 481 zone. So we bounced off of $480.25, and then we recaptured $481. And remember, we had a pre-market low at $482.07. We also recaptured that level as well. So you could have got in on the $482 calls back towards the upside. So you could have purchased right here at 9:40 a.m. And then if you wanted to be on the safe side, you could have sold at the intraday resistance from the morning session when we opened up. The intraday resistance, that was at $483.40. You could have sold right here on this bullish candle. Another quick 10 through 15 minute play. You don't want to hold on your options for too long. You want to get into the habit of scalping your options. So that's why I utilize the TTM scalper alert to help me identify when to buy and in some cases, when to sell. So if you look in pre-market, we had a TTM scalper sell signal right here. So if I'm looking at the market intraday, I'm going to sell close to that same level once again, because if you look at the chart, as you all can see, we had a lot of pullback right here in this area. And the primary reason we had pullback in this area, because in pre-market, that's where we sold off at. So you could have secured profits right here in this area. Okay, now let's say, for example, if you missed that opportunity. Okay, Spence, now where should I get in for my second opportunity? Now, with the second opportunity, you want to wait patiently and you want to wait for some strong 5-minute bullish candles. We had a strong 5-minute bullish candle right here at 10:25 a.m. So this could have been your second entry towards the upside. And remember, we were breaking above resistance level number one, which was at $483.40. And this level, it was developed from the morning open session. And we had resistance level number two at $484.22. And I developed that resistance level from the pre-market data right here, from this TTM scalper alert data in pre-market right here. So you could have got in right here at 10:25 a.m. Okay, Spence, what strike price should I focus on? If you're looking at the resistance levels, you want to now focus on either the $483 calls or the $484 calls. And if you want to pay a little less for your calls, you can focus on the pre-market high. That was at $485.22. You could have purchased the $485 calls as well. And you want to stay close to the the resistance and support levels, strike prices, because you can make more with your options. So if you got in right here at 10:25 a.m., and then you could have sold your entire position right here at 10:35 a.m. at the pre-market high. That's why it's extremely important to have your pre-market high and your pre-market low levels in place before the market open up. And then as the day, transition by, that's when you start developing your support and your additional resistance levels. So the second opportunity, it was right here. All right, so now we're looking for a third opportunity. Let's say, for example, if you missed the first one and the second one, now you want to be looking for an opportunity towards the downside because we're already trading above the pre-market high, and it's a strong possibility that we may start pumping towards the downside. But you also got to keep the market sentiment in place. The market sentiment that we had today, it was also bearish. So you could have purchased put options at 10:55 a.m. We received our TTM scalper alert at $486.58. That was our next resistance zone. So you could have purchased the $486 puts right here on this candle. Or if you wanted to be on the safe side, you could wait for a 5-minute bearish candle below the previous 5-minute candle. Once we broke below that low, you could have purchased your $486 puts right here at 11 a.m. And the primary reason we're focused on the $486 puts because we were just trading near that price, and that's the next whole dollar strike price that would be instantly in the money if we start pulling towards the downside. So you also got to keep in mind, we already had our other levels in place as well. So now you can either focus on the $486 puts, the $485 puts, or the $484 puts, right? So you could have got in right here at 10:55 a.m. and then you could have waited for the TTM scalper alert. So at noon, the TTM scalper alert, that's when it was developed on our chart. So if you wanted to hold your position for an extended period, you could have waited for a buy alert back towards the upside, and you could have sold your entire position right here at 12 noon. So you could have got in right here at 11, and then you could have held on to this position for approximately 1 hour or until we broke below VWAP, which is this yellow line, right here. I'm going to do a quick recap of buying the perfect strike prices to maximize your profits. So in this video today, we talked about support and resistance, and we also utilized those support and resistance numbers to pick the perfect strike prices. And if you look at this option chain, right, for the options that expired on March the 27th, you can also keep volume at the top of your mind as well. So the options that had the highest volume today, it was the $484 strikes and the $483 puts. And if we go back to our chart, you can clearly see we had those support and resistance levels developed around the $484 calls and the $483 puts. So if you found some value in this video today, please make sure you like and subscribe to this YouTube channel so you can stay up to date with more valuable trading tips and weekly trading education.